Hello and welcome to Business Today Television. You're watching our pre-Diwali special series on how India is consuming and spending and what it means for a host of sectors. On the show today, we discuss one of the non-market but directly linked to our economy sectors, which is the real estate sector. And what a time it has been, especially for luxury housing. And to discuss what's happened and what is likely to happen in the new Samvat 2081, we have with us Niranjan Hiranandani, the founder and chairman of one of India's best known developers, Hiranandani Group. Niranjan Hiranandani, the mood is upbeat. And we saw the Dussehra period when it was very difficult to come to the real front page of a newspaper because you had to wade through 5 or 7 front covers of various real estate launches. Luxury is grabbing the headline, but is that hiding a different reality? What is really happening as far as our real estate sector is concerned, sir?
Thank you for inviting me. It's always a pleasure to be with BTTV. And the first thing I want to tell you is the fact that the country is upbeat. It's not only luxury houses, but it is luxury cars. It is luxury items in various fields of activity, and people are looking on the luxury side because overall incomes have definitely moved up. The 7% GDP growth has actually got a downstream movement wherein incomes have definitely gone up. The stock market is producing higher yields and results. Salaries have also gone up almost 7 to 10%, 12% in the year. But overall, post-COVID, as our friend Mr. Datta just told us, the trend in terms of the mindsets of the people is also to see that they get a bigger house, better house, a little more spacious house, a little difference. Of course, if you can afford it. The second part of the story is the fact that banks and financial institutions have actually grown. Lending has gone up as much as 20% of a single bank like State Bank of India. So total home loans which have been given by the banks and financial institutions have gone up. And this is in fact contrary to the position where the PMAY scheme got exhausted August last year. And that is why there is a setback to the affordable housing segment. So two aspects of it, which is very, very clear, is that the overall income levels of people have gone up, aspirations of people have gone up, availability of funds and home loans has definitely gone up. And that is why the premium segment is doing it. A part of it is there is this other story on the sidelines, but that is not applicable all India, that certain cities like Mumbai metropolitan region, huge expenditure is taking place on the infrastructure. So in Mumbai region, for instance, we are adding to 300 kilometers of metro will be added in the next 2 years. We have already done the connectivity to the MTHL going to Panvel and New Airport. And we are getting a coastal road connectivity, which is improving the entire thing. So this and other things and metros in the tier 2 cities also, some of the metro lines are getting laid. So all in all, a heightened market, aspirations of the people to move up the line, and the availability of funds and finances, both from surpluses of individuals, surpluses from the stock market, and availability of home loans. A combination of all this has caused prices to move up, but more than anything, aspiration of people is huge.
Ahmedabad quarter on quarter 2%, Bengaluru 17%. The steepest drop as per this data is in the Mumbai market of 22% decline. On a yearly basis, that's just 1%, but quarter on quarter is 22%. No market out of these 8 has seen gains in this quarter. Is this telling us that a continuous slide is happening, or do you see it being corrected and stabilized?
No, we had 2 weeks of Shraddh period, which is an inauspicious time in Mumbai region. So you can minus 2 weeks out of that. And even then, of course, 22% is a high number. But overall, we don't see that happening in the market. There is definitely some drop, but I would consider it about 5 to 10% in this period. But the interest in terms of the market has come back, and we do believe that this thing will compensate in the next quarter, in this quarter, which is there along with the period of the. The challenges which are there in the local market is more about the election period, which has come up. So everything has gone a little locked up in terms of that. So probably even some of that is going to be a challenge period.
I want you to reflect on the new launches data also and then continue the point you are making. New launch data, this is a quarter on quarter and therefore also an annualized thing. As I can see, Calcutta has had 101% growth in new launches, and that's the largest, followed by Delhi NCR, which reflects to 76% annually, but quarter on quarter 48%. But the surprising thing, Niranjan Hiranandani, is Mumbai saw a 23% dip in new launches quarter on quarter, and Pune saw even steeper 39% dip quarter on quarter. That's on your screen. So is this therefore that India's priciest and most sort of sought after real estate market, Pune and then Mumbai and then Pune, are they seeing the maximum slowdown within this data set? Is that how we should see this?
Certainly, data is always going to be superior to any opinion that I can give or anyone can give. So we will do on that. But you have to understand that today, for example, if you look at stocks, availability of stocks, which is unsold stocks in the marketplace, it is still the lowest that I have ever seen in my career. So the entire stock availability in the Mumbai region, I don't know about the Pune region, so I would not like to opine on the Pune region that is there, because I don't have that knowledge or information accurate enough to be able to give an opinion. But in the Mumbai region, the stock availability with us as developers has dipped by almost 50% to what it was 1.5 to 2 years ago. So if you look at unsold stocks, it is the lowest ever. And that could be one of the reasons why you find this aberration that we are seeing on the statistical data. So new launches will definitely go up again, and you will see this catching up very quickly. But I am bullish simply because we see the market as very bullish at this point of time too.
Okay.
And sales are closing down in the marketplace. I don't know what housing.com is to tell us about it, so maybe Dhruv can enlighten us more.
Dhruv, come in on this.
Also tell you the banks and financial institutions report which has come in also as far as the Mumbai region is very positive.
Okay. Arnab, did you want to step in and ask Mr. Hiranandani for any additional perspective on the markets, especially Mumbai, that they know so well?
Yes, I would like to ask him about not just about Mumbai but also Pune, because if you look at the numbers, the Pune market is now larger than NCR market, which is unbelievable, because Pune in terms of size and population is a fraction of NCR, and NCR has always been the second largest market in the country. Now it is almost at the 4th, 5th position. So what is driving this growth in Pune basically?
I think the Mumbai-Pune belt has been growing continuously. The Mumbai-Pune connectivity and the growth from Mumbai side and the Pune side both have almost come to a tangent. You will find that the linkage between the two cities, though it is I think it's more than 160 kilometers between the two cities. But in reality, if you see the growth on the Pune-Mumbai road, Mumbai-Pune road and expressway, a lot of development is already taking place on both sides, both in terms of warehousing, in terms of industrial, in terms of IT, and all these parts are taking place. Number two, we have the new airport, which is coming up, which becomes much closer to Pune because it's across the harbour and it is on the Panvel side. So you have the airport which is coming up. The Delhi-Mumbai industrial corridor work is also getting completed. That connectivity also becomes extremely important in this segment. So all in all, the Mumbai-Pune expressway Now the bypass which used to go through Khandala and Lonavala is sought to be bypassed by a new tunnel which is likely to open very soon, maybe in a couple of weeks or months. So all in all, what has happened is the distance, though physical, remains the same. The development on both ends are going up. So for instance, let's talk about from the Mumbai end. You will see that they are creating a third Mumbai, which will be at Panvel, in this thing which was announced by the government of Maharashtra just 2-3 days back. And you also have the corridor which you have right up to Khandala and Lonavala. So all those pockets have got industries at the bottom end over there. And on the Pune side also, the development is going rapidly, where you have Chakan and other places on the Pune and Mumbai side of Pune, where the development is taking place. We as Green Base also has 250 acres where we are doing industrial and warehousing, which is going on. And Chakan is a fully developed new area for warehousing and industrial growth, with automobile being a focus area for the development. So industrial, warehousing, IT, residential, airport, new city, and the connectivity being enhanced in terms of the tunnel which has been done over there. This infrastructure is causing the difference between there, and so you see a partial growth and effect of it, where the pricing is slightly lower in Pune, and then people would take that place of it, especially on the industrial side. So it's a combination. It's a combination of a growth which is taking place, bringing both the cities closer in terms of development and infrastructure.
Absolutely. What will happen to prices? Because everyone, somebody who doesn't yet have a home is a first time buyer. Those who have want a second larger home, and everybody looks at that price point. So Mr. Hiranandani, I know it's difficult to average out the various classes of ticket sizes, but what is going to happen to prices over the next 6 months, unless you want to offer us a more medium term forecast?
So your minimum price rise will be at least equivalent to inflation, which is about 5%. So across the board, you will get a 5% increase in prices. Where we get infrastructure which is substantially improved, or you get new things like the Jawar airport or the Mumbai airport, you'll obviously see a price point which will increase at double the rate. So probably 10% or more will increase in these areas. Other places where we are creating too much surpluses in terms of property, there could be a slight drop, but depending on what it is. So, what tends to happen is really you create sometimes supply in a particular area in a short period of time. That is what is happening in Noida and Greater Noida. So the challenge is that when you create surpluses in a short period of time, the absorption takes time. So as long as you're doing it slowly, a 5% price rise is bound to take place across the country. But you will see drops in certain areas where unnecessarily surpluses are created in a very short period of time, and aggressive increase by about 7 to 10% where infrastructure boom is taking place, like Jawar or Mumbai region, like Panvel, Navi Mumbai, 10 to 12%.